Good afternoon, everybody. Welcome. Welcome to the market close. We got ourselves a green day. Who, who would have predicted today was going to be green? Today, of course, being the day that the expirations on all of the pauses put on tariffs comes into effect. Well, it looks like it's not that bad. It looks like it's not that bad at all. In fact, kind of a little bit of a letdown. So if you had been hoping to buy the dip today, well, you may not have had that opportunity, but what can we say? There's still the rest of the week. We'll have to see how that turns out. I don't know. It's been an interesting day. Now I made a swing trade for today. It didn't quite go exactly as planned, but we're gonna get to that. We're gonna get to some other stuff. We're gonna talk about next Thursday. Yeah, we got a lot to cover, but as always, this is market close. Let's start the day off with the market, shall we? What a novel theory here. As you can see, we got a green day on the TSX. It's up by 0.38%. So we are in the green, and this blue line, those of you who are new to the channel, this blue line, this is where we entered the month. So this way there, we get a good idea on what's going on month-wise. And right now, July is still currently a green month. So we'll pay attention and we'll watch that as we move through the month and see how that goes. I have a feeling, I don't think we're going to be like really high above the green line by the end of the month, but I definitely think that we will be above it. Looking at the United States, the S&P 500, they're also having a nice green day. They're up 0.54%, and they're well above that blue line as well. So they're having a green month too. The NASDAQ also up 0.62% today. So it's green pretty much right across the board. They are, of course, well over the blue line. So we got a green July so far for the NASDAQ. Same for the Dow Jones, up 0.45%. And the big winner of the day is the Russell. The Russell is just absolutely kicking butt. It's kicking butt. It's kicking butt big time. Look at this, up 1.22%. Looking at commodities, gold is up today, 0.4%. Silver's down a wee bit, down almost 1%, 0.91. We've got oil up 0.27%. And that's interesting because I know OPEC has been talking more about those increases in production coming in August. So they want to stabilize the oil market and they want a bigger share of it. So that's kind of part of what's all behind these output increases that could have an impact on the price of oil. So if you've been waiting for oil to skyrocket, well, you had your chance. You had your chance when the bombs were dropping in Iran. Right now, I have a feeling that oil's not going to go really high this summer unless we get another black swan event. That's always a possibility when it comes to oil. Bitcoin's having a good day, up 2.36%, and Ethereum, even better, 5.43%. So pretty strong day on the crypto markets. All right, let's take a look at the heat map. We got Canada first, and you can see here the banks are kind of flat. They're up a little bit. Like, look at this. TD is up 0.22%, but overall they're fairly flat, other than CIBC. So CIBC up a full 1.55%, but they've been having a really good year. Absolutely. Looking, the railroads, CP up a little, CN down a little. Suncor's having a good day in the world of oil, up 1.62%. And our non-energy minerals, that's where we're seeing most of the positive action. And of course, we got gold up, so that's definitely helping. But one of my favorites, London Gold, up a good 2.85%. So not too shabby at all. All right, let's take a look and see what's happening in the United States. Tech's having a good day. Let's just put that on the table. Tech having a good day. NVIDIA up 1.74, Broadcom up 2.20, Meta up 1.89, Google up 1.51, Microsoft up 1.17. Not too shabby. Tesla kind of the odd man out. They are down a tiny bit. Well, I'll call them flat. It's only 0.19 down. Also, I'll say the same thing about Apple. Apple's only up 0.12%. So what can we say? What can we say? And with crypto, well, look at this. We got a lot of green. A lot of green. Oh boy. And when we dive down into the crap coins for the day. There's more than 15,000. There's more than 15,000 of these coins. I like to pick one the opposite color of what the overall market is doing. So we're going to grab a red. Let's just grab some random red coin that I've never heard of. This looks like a good one. Integrity Network. What the heck? I don't even like the name of this one. This is crazy. I don't know what this is. I don't know what it does. Honestly, I don't even care what it does. It's not worth much. It's worth about 14 cents. 14 cents a coin. I look at it this way. If you're going to get into crap coins, these are pretty much the same idea as penny stocks, but more risky, If you want to invest in something like Integrity, at the very least, read the white paper, understand what it does, have some kind of faith in it. Honestly, there's a lot of money to be made in crypto, and this is not where it's at. This is not where it's at. Oh boy. Where it's at is up here on the top page. Things like your Bitcoin, your Ethereum, your XRP, your Solana, and gosh darn it, even your Dogecoin. You're better off on all of those. Look at that Dogecoin up 3.40%. So what can I say? All right. I'm going to put this back to our front page, and we'll just drop back on the TSX. And let's hit up the chat. All right. Zozo Trader in here first. TSX never goes down. Sometimes it feels like that. The markets have definitely been moving higher and higher, and we keep getting all-time highs. So right now, the bull market is still happening. It's still happening despite a lot of the economic headwinds that you would think would be slowing the markets down, but they're not. They're not at this point. And let's see. Alimentation Couche-Tard looks like a buy, holding the 200-week moving average. I would wait. Personally, I would wait until we get a clear indication on what's going to happen with that 7-Eleven takeover. Because if it goes through, then ATD is going to have to dilute shares to pay for that. And well, if they dilute shares, that's gonna drop their share value. So I would wait. I expect to hear something soon because quite literally, we normally don't go this long without hearing something. If you really want to get in there, there's nothing wrong with that. But just definitely do some due diligence and pay attention to what's going on there. All right. Roku says in first. Hi all. Well, you're in second. But close enough. Well, here's the funny thing. When you go to type in something like this, it can look like you're coming in first, but the other person may have hit their enter before you. And sometimes it doesn't work out. I don't know. Burgers is in the house with a bow, 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 bow. I like it. A lot of bowing. And we got the Nightbot. Nightbot is in the house talking about a Friday show. You guys know what we do. So guys, if you want a Friday show, very, very simple. Through the course of the show, if we get 4 supers, or heck, if somebody were to donate 4 memberships, random memberships to folks, any combination of that will get you guys an extra market close this week. All right, Brian is in the house with a good afternoon. Hi all, no dippers. Yeah, no dipping today. Well, unless you're going back in the whole skinny dipping, but I don't want to hear that story if you are. Brian says, hit the like button for Mary. Yeah, guys, it's one of these things. The way the algorithm works on YouTube is when you interact, So when you're leaving comments and hitting the like button, it tells the algorithm that, hey, people are enjoying this live stream, and it will push it out. And you never know, we might find some brand new people because you hit the like button. So that's pretty darn cool. I'm drinking iced coffee again today. Doorpat says, hello all. I feel bad being been sitting on substantial cash a while now, waiting for the dip. I'm just so scared to lump sum everything at all-time highs. Hope we get dips soon. All right. And that's one of the problems with, this is one of the problems with sitting on cash. I'll mention that. I'll say this right now. A lot of times you'll be sitting on cash, and by the time you get the dip, that dip may not drop below where you were when you started sitting on the cash. So that's always one of these things. Now, if you are going to sit on cash, one of the things I will say is don't sit on straight cash. Use one of the cash ETFs, because then at least you're getting something, because a lot of them will give you a dividend, like, 3-4%. At least that's better than nothing. So you want to make sure you at least got something coming in from that cash. And the big thing is with a dip too, sometimes as well, you might have to sort of look, which stocks are you interested in? And maybe one of them dips, and you might be able to get in, do a little bit of dollar cost averaging on there. Or there's nothing wrong with starting, even if it's all-time highs. There's nothing wrong with doing a little bit of dollar cost averaging. You can always just do a little bit. Let's say, for example, let's say you're sitting on $50,000. Nothing says that you can't say, well, okay, you know what? I'm just gonna drop in $1,000 a week right now. I know, because we're at all-time highs. I don't want to go deep. Even if you drop in $1,000 and you invest $1,000 a week, and you're slowly building things up, if we get that bear market before the end of the year, you're still going to have a significant amount left, so that you can buy the dip, or just continue the dollar cost averaging. When you look long term, dollar cost averaging tends to be the better play than just holding and waiting for dips. So that's just something to keep in mind. And what time is it? I have to pay attention because I don't want to miss the bell. I will say, I'll show you after the bell. I'll show it because I know if I go into the whiteboard, we're going to get distracted. We're going to miss the bell. All right. Jordan says, Heidi there, Candace. How are things? Hope you had a wonderful Canada Day. Not too shabby, not too shabby. Hopefully you're doing well. I hope your wife is doing well. I remember you telling us about some of the bad news that you had with her the other day. Hope she's doing much better. It sounds like everything was going in the right direction. So I like. Brian says, I bit the bullet and dumped all of my losers, EV, REITs, and pot stock. $25 $5,600 book value sold for $415. Yeah. But you know what? Sometimes you gotta bite the bullet. Sometimes it just makes a lot of sense. And you know what? It's kind of like an old forest, right? Sometimes you gotta clean out the old stuff to make room for the new stuff. So, take that 415 and put it in something good, and maybe grow it a bit. And then as it's growing, you'll feel a little bit better. All right. Burgers says, let's see, my beautiful ASPS eviction company is up 141%. Holy banana bread. That's really good. Year to date. So holding 30,000 shares, it's currently 1311. I think it's worth 18 to 120 per share. Yeah, that's really, really good. Now, this is about smart stuff. This is smart stuff. So what Larry's been doing here is that he's identified that there's a problem. People are running out of money. People are over leveraged, over debted, and a lot of them are running into things like foreclosures, evictions, all of that stuff. It's not good, not good at all. But as an investor, Larry's like, well, what companies are dealing with this? What companies are now overwhelmed with business? And those are the companies. Those are the companies that that he's investing in, and he's making a killing doing it. All right, guys, it is time for the bell. All right. Woo. And the market. The market is closed. Love it. It's closed. All right. Brian says, thanks for the additional ETF video. I was looking for more to choose from. That's funny. It's funny. So the first of these 2 ETF videos, so this 5 stable ETF videos, I made that video and I was like, okay, I need to make something for the income investors, because about half of my viewership are pure income investors. The other half are pure total return investors. So I kind of have to balance between the two. So I was like, all right, I'm going to make one for them. And that video exploded. I think it's got like 10,000 views. I mean, a lot. So I was sitting here and I was looking at my original data when I pulled the data, and I was like, oh, you know what? There were about 10 stocks that came up when I pulled this data, and I'm like, I still got 5 more. So yeah, I was like, well, can lightning strike twice? Let's do it again. Exact same video, but we'll do the bottom half. Yeah, and so it's doing well. It's I released it yesterday. I think it's got about 2,000 views. It's doing well. All right, Brian, once again, let's see. I've been looking at all of these ETFs that seem to be using covered calls to boost dividend yield. At what point are we going to run out of buyers of the options posted? I don't think we will, to be honest. I mean, the options market it's very, very healthy. So I think there's always going to be buyers. There's always going to be people who are gambling on which way a stock is going. So buying options or selling options. I think that'll be a healthy market. So I don't think they're going out. If anything, options has been getting more and more popular. So I don't think there's an issue there. I don't think at all. Let's see. It would be interesting to see how many options are bought and sold daily. There's probably a place you can find that information. I haven't really thought about that, but I believe something makes me think that, yeah, let's go. We're going to go. Let's see what something is making me think Yahoo Finance. So let's pick something that has options in it. Well, we'll go to, well, actually, we don't need something with options. Just anything. Let's go to NVIDIA. Oh, you know what? We'll go to Tesla, because that is something that there's a lot of options written on about. But, all right. Now, something tells me that there's a whole bunch of options data in here. So we're clicking on options on the side. And let's see here, strike. These are some of the options that are going on here. So yeah, you can get a list of all of the options that are happening. It's not really giving you stats, but it's actually showing you. Now, I wonder what options we have in here. This is all strike prices. Oh, okay, that lets you choose your strike price. All options, calls and puts, list and straddle. Let's take a look at straddle. What does that look like? Oh, okay. I kind of like the straddle version a little better. All right, so you can at least get that amount of information in there. I don't know if there is anything else in here, but you can definitely get a little bit of information. Let's see, price targets, revenue earnings, low estimate. Let's see here, revenue estimate, EPS, earnings history, EPS, growth estimates, top analysts, upgrades down. Yeah, it's not giving me any real specific, but I know there are sites out there that are very options oriented. So if any of you guys know of a site where you can go and see what kind of a volume is moving through options, that would be fantastic. This could give you a bit of an eyeball, though, if you do come in here and go to options, because you can at least get a general gist on how much options are happening. Like, look at this. Well, okay, maybe they're not completely in order, because I'm looking at this as a 737977. But it might give you you can at least eyeball and see what's happening options wise. All right. Andrew is in the house with a hey everyone. Oh, let's pull back over here. Mary Finn is in here with a hello. Hi, Mary. Guys, make sure you guys hit that like button because Mary's in the house. She's watching now. All right. Before we go any further, though, let's head over here. When we're talking about that lump sum and we're talking about all-time highs. So one of the things that I wanted to do here is I'm just going to pull up the whiteboard. Here's the whiteboard. Oh boy. Come on, whiteboard. Seriously? I may have to refresh the whole page here. We'll go back to Canva. And we're going to go new whiteboard. Here we go. So this is kind of one of these things. I'm just going to pull this out. I'm going to pull out a pen. I'm going to draw. All right. So this is a typical, we'll just say, we're not going to do all of the things. We're just going to do the general trend. So a lot of bull bear markets will look like this. You'll have this big bull market, then you go into a bear market, then into a bull market. Now, what's important about this is I'm just going to take that low. I'm going to create a little line across like this here for us. There we go. Hopefully you guys can see that line. Actually, you know what? Let's just make it a solid line. There we go. There, make it a little bit easier to see. So there's our low. So as we're in this all-time highs, and I'm going to change my color here. Let's just change the color. Whoops. We'll go to this one. We'll pick purple. All right. Just put a dot over here. So as we're in all-time highs, you could be sitting here, right here. We don't know where we are on this. This is the whole thing. Nobody knows. Nobody knows. But we could be sitting right there. And if you're sitting right there and you're sitting on a pile of cash. So here, I'll put an S there. You're sitting on a pile of cash. You're waiting for the dip. You're waiting. Oh my God, that dip comes. Well, the dip comes, but do you think you're going to wait out the whole bear market? What chances do you think you have of hitting right there? But we're going to say that you're very lucky. We'll say you do hit right there. Yay, you hit the bottom. Congratulations. Oh, we'll give you some hair. There you go. You hit the bottom. Great. Awesome for you. But guess what? Look. This bottom is higher than where you started sitting on the cash waiting for it. And that's one of the dangers of waiting for the dip. So if you're at least doing a dollar cost average, and every so often you're buying some stocks. Well, in this case, all of these ones right in here, those ones there, they're all better. They're all cheaper than here. Now, yeah, the ones you bought up here a little bit more expensive, because if you are buying the dip, it's going to be like this, and then you're going to be buying the dip coming down, and yay, great. And then kind of going like this. So buying the dip, what buying the dip ends up doing is at the end of the day, you will end up with something that looks like that line in the middle. So it's going to be the average price of that asset, the fair price. So sometimes now, if you buy it at that, that person who waits for this to happen, a lot of times, here's that problem. If you've got the patience, if you have the patience to wait that long for your dip, and then you go into a bear market and you're like, I'm not going to buy at the beginning of the bear market. There's still miles and miles to go. And, you get down here. Well, you're not going to buy here. There's still miles and miles to go. But guess what? Nope. It's happened. And by the time you realize that the bear market may be over, it might be up in here. You might end up buying in here. And then when you start to look at it this way, look at the difference from down here. That's a big difference. That's one of the reasons why like I said, that is the reason why buying the dip. I always like a dollar cost average with a buy the dip. So what I do, this is what I do. See, what I do is as we move along, I will usually split things up. So I will have I'll have my dollar cost average DCA. That's a terrible D, but I'll have my dollar cost average, and then I will have my cash. So what I normally do is I'm just going to draw this one over here. In this bear market, in this bull market, I don't know when it's going to end, right? So early in the bull market, the chances of it ending are pretty darn slim. So I'll put probably 99% of my money into new assets, into dollar cost averaging. And I might have 1% that I'll put into fixed asset. So fixed asset might be a cash ETF, or maybe I'll even count a commodity in there. Sometimes I'll put it in something very, very safe. Now, as we move deeper in here, if I do use anything that's not a fixed asset, something like a commodity, like let's say for gold, if I put some of that into gold, I'll probably shift it back into here. Now, as we move along and we get deeper, so, this is right here. If we get a little bit deeper, okay, I'll start to go, okay, well, let's do 98% into dollar cost averaging. We'll just do it here. We're going to have cross wires. We're not the Ghostbusters. We can cross wires. We're good. 98 and then maybe 2% going into cash. And as we get further up, well, maybe I'll get to a point where I'm like, 95 and 5. And I'll do that going up. And then, of course, I'll be still doing that. Now, we start to go into a bear market. Initially, for me, when I'm in the bear market, I'm still going to be doing this because I don't know we're in a bear market. Basically, a bear market is if our all-time high was 100. Let's just say 100, obviously we're dealing with bigger numbers, but we'll just use 100. Well, then for us to be in a bear market, that needs to drop by 20%. So we would need to have, if the TSX was at 100, it would need to drop down to 80. That would be the bear market. So once we get to that, once we cross that line, now mind you, and I'll show you right now, I'm just using that as a number. Right now, the TSX is at 26,965. So it would be 20% lower than that. That would be where I'm going to start to pull that trigger. So where is my thing here? Untitled right here. So that'll be my line. So when I hit that, I will then switch at that point. Let's say at that point, dollar cost averaging, let's say at that point I'm just going to extend this down a little bit. Let's say I'm at a point where I've been doing 90 and 10 because I'm expecting it. So at that point, I'm going to flip it around. And now this here is still going to happen. All right. But this will be new money. So new money coming in, I'm still doing this. But what I will do is once we're in the bear market, I'm going to reset that back to 99.1 like that. So I'll reset that. That's new money. That's new money coming in. Now, the money that I've been putting away, the cash fund. So let's just say, for example, well, I'll put 100 here because we'll say it has 100% of that cash fund. I'm then going to do reverse. I'm still going to do dollar cost average, but I'm going to reverse this process. So as we move in, so once we get to that critical point, and we'll say that critical point is right here. I'll just put a little squiggly line. So once we're on the other side of our squiggly ravine there, I'm now going to start spending this. So I will probably start with, it'll come down to if it looks to me, there will be a bit of a judgment call. If it looks like it's going to be a strong bear market and I think it's going to last for a while, then I'm probably not going to go gun ho. I might start with maybe, 1%, each cycle. I might do 1%, 1%, 1%. And then as this As this gets a little bit bigger, I will then go 2%, 2%, and maybe 3% as we start moving through. Now, mind you, let's come back here, and I'm just going to make it like this here. So mind you, at this point here, I'm, I probably about here is where I've started. I'm dollar cost buying, I guess. Yeah, I'm dollar cost averaging on my way up. Once I get to a point, and now here, at this point here, this is going to be your bottom, right? So once you're about 20, 25% above that bottom, you know that you're out of the bear market. At that point, I will then stop spending what's in my cash fund. So let's say, for example, there might be, let's say there's 15% left. I'll just leave it there. I'm fine with that. Unless something big happened, that there was like a really, really good dip, or there was a black swan event that opened up a really good opportunity, I'll just leave that there, and then I'll switch back again. And then I'll be back to adding to it, adding to it, adding to it. And I'll do that through the bull market until we eventually get to another bear market. So that's kind of the way that I've been handling it. So, and I don't think there's any wrong way to do it. There's some people that come in and all they do is they don't care what the market's doing. They just want that straight line, and they're just doing that dollar cost average all the way up, whether or not the market might be looking like this, it might be like this, they don't care. They're just doing that straight line up, and that's a very profitable way to invest, especially if you've got a long runway. If you've got a long runway, holy banana bread. So somebody was asking me, like they're like an RESP. So if you set up an RESP for your newborn, well, that's got like what? It's got at least, it's got maybe 18 to 19 year runway right there before they're going to need money for education, if that's the route they're going. But that is a perfect place for a DCA. And I usually say one of the greatest things, I think, for like something like an RESP, if you want to just DCA, pretty much a passive income ETF, something like like a VFV, or a XEQT. There's a whole bunch of them that you could use. All right. Off on the tangent again. All right, let's get back to the main screen. Let's see. Brian says, "Good afternoon, Mary. I already hit the like button." Merle says, "Hi." Let's see. Brian, I know we can count on you. There we go. Brian's awesome. Phyllis says, "Can you briefly look at the earnings for FTG? Thank you." Yes. All right. FTG, Fearin Technology Group. So I've talked about them for a while. I love this little company. Now, they had their earnings. They had their earnings out. Well, they had their earnings out yesterday at close. Now, they have fallen, which is amazing. I was not expecting that. When I looked at their growth for that quarter, they were doing fantastic. So, and you'll notice here, let's take a look. When it comes to earnings, they were expected to come in at 10.7 cents a share. They came in at 14. So they beat that by 31.25%. Revenue, same idea. They came in high. They actually came in 1.80% more than expected. So this looked fantastic. In fact, I actually decided to swing this. So I did a swing trade on this, not in the 0 to 100K challenge. I do hold them in the 0 to 100K challenge, but that's more of a long-term hold. But outside of that challenge, I decided to do a swing trade. So I got them. Give me 1 second. Let me take a look here. I have to take a look. 11.39. So earlier in the week, I bought some shares at 11.39. I was expecting a really good morning. Well, They did not have a great morning. So they closed yesterday. They closed at, what was it, 12, I think it was 12:42. So they closed around 12:42. I watched as the market opened, and the explosion I was hoping for did not happen. They were sitting here and they started to slowly creep down. So next thing you know, they're down at like about I think they were down about 12:22 pretty quickly. At that point, I'm like, you know what? This is one of those situations where something happened in the presenter. I did not have the time to watch what was, because the presenter stuff was happening this morning. I did not have a chance to see what's going on that's upsetting investors on this stock. So I jumped out. I jumped out of that trade. Now still, for each share, I mean, I still made a half decent amount. I still made a good profit on this swing trade, but not as big as I had hoped for. Not as big as I had hoped. Uh-oh, guys, I am sorry. I just realized I don't have the screen up. Here we go. Sorry. So yeah, FTG, as I was mentioning here, FTG. Oops. Here we go. FTG. I did the swing trade. I got in at 11:39 earlier in the week. 12:42 is where they closed yesterday. People were excited going in. A lot of people were buying later in the day yesterday. I got it earlier in the week because I knew that, if something didn't work out, whatever hype built up in the week would give me time to get an exit strategy on the next day. And I took that exit strategy. So I got out here at 12:22. And here, once again, here is their earnings right here. As I mentioned before, they beat earnings by 31.25%. They beat revenue by 1.80%. So yeah, it was a little disappointing. But sometimes that happens. And that's one of the dangers of swing trading, that all the data can make it look like a sure thing, but it's not. It never is. So always have an exit strategy. In this case here, this was my exit strategy. I got in early enough that all of the hype gave me a good buffer so I could get out with a profit. And that's what I did. Now, right now, and oh boy, well, take a look right now. They've fallen all the way down to 1167. So they fell 6.04% through the day. Now, let me just go back here for a second. Even at the end of the day at 1167, I still would have made profit because I got in at 1139, but I'd much rather take the 1222 that I had. Yeah. So anyway, yeah, they didn't have the best day, but I still love this company. So they make like circuit boards and things for defense and aerospace stuff. I think there's going to be a huge demand for them. I think they're going to do really, really well. I think, though, what happened is that hype. I think the hype got them. I think it was the hype because actually here, if we go over here and let's just put in FTG and bring them up this way. This here is that hype. And if you remove the hype and you just look at where they were sitting earlier in the week, and I'll just go back to the last month. Let's go 3 months. You can see they were slowly building up. We got this giant bottle of hype. And that hype, it went up, it came back down, sure. So I don't think there's anything wrong. I think they're still in a good place. I think they're still a good investment. I think they're still a good long-term. So I am happy. I'm happy with them. And I have no intention of selling them in the 0 to 100K challenge. Like I said, they're there for the long haul. All right, let's get back to the chat. See, Rory says, or pick bottles, 10 cents a can. There we go. Yeah, apparently there's a place in Quebec that you can, just across the border here, that you can get, I think you can get 10 cents a can. I'm just like, wow. Because there are days, like, because you guys know, I like that bubbly water stuff. There's days where we'll put out our blue bin, and somebody will come by in a truck and take all the cans out of it. It's just totally interesting. But It happens. All right. Mark says, hey, Candace, totally agree with you on waiting for the dip because no one knows the dip. Gartner study says 80% of the time buying now beats waiting for DCA. And yeah, 80%. That's a really good statistic. Mark's hit that nail right on the head for sure. Jordan says, yes, she is doing much better. She is home and we are taking it easy. Awesome. Yeah, absolutely. This is what I say is like her body will let her know when she's ready to maybe, have it a little bit less easy, but yeah, absolutely. All right, let's see here. Market close on Friday, how that happens. All right, burgers. People want to get rich quick, so they keep buying options. Yeah, there's always going to be that aspect in investing. There's always going to be that person who, you're not going to get rid of day traders unless it gets to a point that AI has it so dominated that it's almost impossible to do it as a human. But then that just means that you'll get yourself your own AI to do it, and you'll just sit back and take the profits from that AI. Let's see. Rory says more online brokers seem to really sell options more than anything else. Yeah, it's big. I mean, if you look, even just at the beginning of the pandemic, the amount of covered calls funds out there, I mean, there wasn't a lot. There really wasn't a lot. So it has exploded, and now they have exploded. You've got covered calls, and now you've got covered calls and leverage. You've got the synthetic covered calls when you're looking at things like yield max. So yeah, I don't think it's gonna, if anything, I wouldn't be surprised if they find ways to make them even more complicated to get more money into that, into the pipeline. Brian says, I'm too old to start playing options. Yeah, but you don't have to. That's the thing. If you find a half decent covered call ETF, it will do the options for you. So, I mean, in a way, it's kind of like you're paying, because through the management fees, you're paying somebody to do the options for you. So, it's still there. It's still there. Let's see. Rory says, not sell, but promote the use of. All right. Jay says, I heard about a new fund from BMO called CDR. Can you buy or assess stocks from international markets would otherwise be more expensive, and now it's Canadian hedge and you pick up individual stocks? So yes. So CDRs. I love CDRs. So CDRs have been around for a while. Now CIBC initially was they initially started the CDRs. So they stand for Certificate of Depository Receipt. So CIBC started it with American companies. So a lot of the big American companies. So like, for example, if you want to buy Microsoft, you can just buy the CDR. So that way it's all hedged in Canadian. You don't have to worry about any of the currency exchanges. You don't have to worry about how expensive they are, because, you're going to pay, maybe $20, $25 for that CDR. And they were very, very popular. Now, towards the end of last year, CIBC added some German ones, some of the big German automotive companies. And this was fantastic. I was like, this is what we need. We need international CDRs. Now, just this month, BMO came in and they've started selling CDRs. And they're doing pretty much all international. So you can get companies in Japan, Switzerland, Germany. I don't know all of them off the top of my head, but there's a lot of them. In fact, let's take a look. Let's go over here and we will go to Google. All right, let's see here. BMO CDRs. All right, here we go. Here's the BMO CDR directory. All right, so here's just a hint of some of the ones that are available. So this one here is from Switzerland. This is for ABB. So I don't know who that company is, but if you know who ABB is, let's see, we got one. So we got Switzerland, we got Germany, there's the Netherlands, Spain, Japan down here. So Japan, Canon, there's a popular name. More Germany, more Japan. Hitachi, however you say that. We got that. We got Switzerland, Spain. Looks like, I think it's mostly those countries there so far. Now they can add a whole bunch more. So it looks like they got about four different countries. It looks like this to me is fantastic because if you normally wanted to invest, let's say you wanted to invest in some Japanese companies, so something like Canon or Mitsubishi or Hitachi, you would have to find a broker that would allow you to do international markets, and you're going to pay a bunch extra for that. It's going to be a lot more fees and things like that. This takes that all off the table. You don't have to worry about it. You don't have to worry about the price of the yen. You just buy. You just buy. If it has dividends, you will get your share of that dividend back. Now, these are really, really a great way if you're looking to add international diversification. So as a Canadian, you've got 3 ways to get international diversification. The hardest and most, the hardest is, like I said, getting access to international markets. So international brokers so that you can buy something on, like, say, for example, on the UK market or on the Japan market. That's one way, the most difficult. The second way is, if you can find an ETF that deals with that market. So obviously you might be thinking of like XEQT. Well, they pretty much have stock. They've got thousands of stocks that they have access to all over the world. Wonderful. Or if you're looking at a specific country, like, say, for example, India, you can get an Indian ETF that will have all of the big companies in India. There's Australian bank ETFs. There's European bank ETFs. There's a lot of ways that you can do it. Here's that last, and this is the newest option, is with these CDRs. They're fantastic. They're absolutely kind of cool. And I'll tell you the funny thing. I was looking for the video to make for Friday. So I was thinking about introducing you guys to these new BMO CDRs, because I did a video showing off the CIBC one. So I thought, that would be a perfect idea. And then up popped a video from our favorite Canadian in a t-shirt. And I was like, oh no, he just did this. So I don't want to, I was like, no, I can't do one immediately right after that'll look kind of suspect. So Friday, we're going to do a deep dive on HHIS instead. So but I will do this sooner than later. Probably, I don't know if I might just do one and combine and sort of take some of the key ones from both this one as well as the CIBC ones. So the big difference is that it won't be sponsored. I know the one that Canadian in a T-shirt did was sponsored, but these are good products. So, I don't doubt the sponsorship in any way, shape, or form. It's they're a good product. All right, let's get back here to the chat. All right. Let's see here. Brian says 32 watching and only 5 likes. Move your mouse, everyone, to the like button. Keep in mind, Brian, this is just an idea. Sometimes, I know this happens to me. Sometimes I'm watching a live stream of somebody and I'm looking at the likes. Sometimes the like button gets stuck when I enter that live stream. So I have to actually refresh the live stream and then it fixes the number. Now, I don't have any idea how many likes are on this, but and this is what I say, be careful too, though, because I hope a bunch of you didn't just hit refresh, because if you don't have like premium, then you're probably going to be watching ads again if you do hit refresh. So I wouldn't hit refresh, but just be aware that it might be higher than what you're seeing. It might be, or it might not. Maybe there's only 5 likes. I don't know. I hope not, but maybe. All right, let's see. Rory never got into covered calls. All right. And I'm going to start as we get busier and busier with these. I'm going to try to jump over when you guys talk to each other. Unless there's something really darn interesting in there, I'm going to try to jump over it, just so I can keep up with you guys. And as we eventually get really big, then we're going to be looking at super chats. For example, I need to mention this. So we have, I've got a new series that I'm starting next Thursday. So not tomorrow, a week from tomorrow. I'm calling it This Week Conversation. So I'm going to do one-on-one interviews with some folks in the, in the financial sector, of course. So the first one that I'm going to do, I'm actually bringing Brandon Beavis over. So me and Brandon, we're going to have conversations. We'll probably talk about his move to ETFs and the popularity of ETFs. We'll probably talk a little bit about Blossom too, because he's one of the big wigs at Blossom, and I have a feeling that's going to filter in for sure. But it's going to be great. But here's where I was kind of mentioning. It's going to be really, really hard, depending on how many folks come next Thursday, to be able to read all of the comments and stuff. So next Thursday, if you're here and you got a question that you really want answered by myself or by Brandon, throw up a super. Even if it is, you know what? I know money's tight. Even if you do a 99-cent super, it'll at least highlight it, and I'll make Brandon answer. I'll make Brandon answer for you. So just keep that in mind for next Thursday. Anyway, for now, we're all good here. Rory says, let's see, I've come up with a micro DCA strategy at these ridiculous highs for the ETFs. Yeah, I mean, it's that funny thing. A lot of people think, okay, my way of investing is the only way to do it. Wrong. There's so many right ways to do it. And there's so many, not everybody has the same goals, because everyone's situation is a little bit different. So for example, let's just take retirement. If you have somebody who's got pensions out the yahoo, they got so many pensions, they got so much cash flow, they may not need income. Because even though, typically in retirement, you normally are looking at, those higher dividend ETFs to get that income flow, especially the tax-free income coming out of the TFSA. If you've got more income than you need, then you probably don't. Your concern is probably not generating income, but rather continuing to grow the amount, the money in these accounts, so that when your days are done, you got a bigger nest egg that you can give to your kids, or to charity. Who knows if you don't have kids? I mean, wherever you're giving it. So there's never a wrong. Whereas you take somebody who does need that tax-free income, well, those two portfolios are going to look very, very different. And is one right and one wrong? No, they're both right. They're both right because they're both right for that person. So it's kind of that interesting thing. Anyway, me and tangents. Brian says, no one can time the markets right, even though many claim they can. They make great fishermen, dollar cost average, and maybe add a bit on dips. Yeah. Some people, there are some investors who are absolutely damn lucky. Absolutely. I've had that happen. Years ago when I had some of the Weed MD stock, I happened to be online. I happened to be looking at the chart when when Wall Street Bets went and pumped it, and I ended up selling it at a high, at a profit. That was just pure dumb luck. I happened to be there at the right time, and I happened to get my sale in before it fell big time. I mean, I quite literally caught it right at the top. That's hard to do, but it wasn't skill. It was 1 billion% dumb luck. 1 billion%. I was gonna say Tory. Rory says, just wait for Trump to start talking, but that even no longer has much weight to it. That's a thing. We're starting to get used to the overall uncertainty and chaos that is Trump. When you live in chaos for a long enough time, the chaos starts to feel normal. So yeah, if you look at the crazy stuff he does now, it's not that much different from the initial crazy stuff. Just that we've gotten used to it. So it's not impacting the market as much as it was before. And let's see, Brian says, yes, his daily BS and to AM thinking out loud tweets, truth social lies are having less effect on the market. Yeah, they really are. All right, let's see. 1 to 2% DCA works better with zero commissions. Yes, absolutely. And then I know National Bank, I think that's a DB. And National Bank Direct Brokerage has zero commissions as well. They do, absolutely. So yeah, if you're looking at zero commissions, you've got, of course, Wealthsimple. Wealthsimple, I think, is one of the best especially if you're a new investor. You can't beat it. Wealthsimple is absolutely awesome. And I'll tell you, if you've been thinking about trying Wealthsimple and you haven't yet, there's a link down below. It is a referral link, so you'll get like I think you get $25, and then I get $25 if you try it out. It's free money. But I do like them. Now, as Rory was mentioning, National Bank also. The National Bank Direct Brokerage also has commission-free trading. The one downside is if you are a new investor and you don't have a lot of money, well, they will charge you $100 a year if your balance is under $20,000. So that's just something to keep in mind. That's that one fee. But if you got more than $20,000, you don't have to worry about it. There's also Questrade. I'm not a huge fan of Questrade. I just find their customer service not great. I just don't like Questrade. I've tried to sign up, and it just hasn't worked. It hasn't worked. Desjardins, they have a direct brokerage as well. That is also commission free. So those are a few of the options that are out there. There are other options as well. I wouldn't pay commissions though. Unless I'll give you an exception. If you're an ETF investor, and let's say you've signed up over at Scotiabank and you got iShares, they charge no commissions on ETFs. So maybe that's fine. But yeah, if you want to do, I guess if you want a dollar cost average, if you want to nickel and dime it, Wealthsimple I think is probably one of the best. Also, you get the fractional investing too, so that's not too shabby. So if you only got a couple bucks and you throw it into Wealthsimple, you can get it. You can get yourself a nice little fraction of a share. Brian says, I'm only adding money in Wealthsimple and Questrade now. No more TD. Look at this, $9.99 trading fees. Yeah, that's crazy. Let's see. RBC closes at 181.29. Oh boy. Let's see. I think I saw a note that RBC increased their dividends as well. Okay, that's not bad. Let's see. Enbridge. Let's see. Closed $60. Below $60. Long time seeing that. Yeah, utilities were down today, so it might be an opportunity for me to add more to my some of my utility holdings. I'll have to take a look. Well, we'll have to see, of course, tomorrow because I can't do it right now. Brian says, let's see, I've watched Enbridge for years and keep thinking they absolutely need to cut their dividends, but I've never bought them. And you know what? And that's that thing. I mean, a lot of times you'll watch a stock for years and think, yeah, they should probably cut their dividends. It will help them out. But there's a lot of companies that are not going to. Utilities are one of those groups that you don't see a lot of dividend cuts. Well, for most part, there's a few exceptions. Looking at you, AQN. But now, every so often, though, we do get a stock that comes along that have an insanely high dividend because they crashed so badly. And we're talking about Bell. And Bell absolutely needed to cut their dividend when they did. And that could actually turn out to be a very healthy thing for them. So we'll have to watch that sector. I still don't have a lot of faith yet in the communication sector, but I'm warming up a little bit. Not a lot. Tim says, am I crazy to sell CNR to buy Google and Amazon? Well, not necessarily. It just depends on what your goals are. Now, I do love CNR. But at the same time, if you're over diversified in CNR, then yeah, it makes sense to sell some of it. Or if you've lost faith in it, there's nothing wrong with that as well. All right. Jay says, speaking about RBC, in the past, I pay zero fee banking. I have their credit cards. Did RBC change their policy lately? I'm getting charged $4 a month now. That I don't know. I don't act. Yeah, I've never really banked with RBC. Andrew says, let's see, Wealthsimple and Questrade are the way to go for sure. Questrade does have better research tools, I find, though. But I'm with Wealthsimple since I use Stock Unlock anyway. Yeah, exactly. I mean, there's a lot of tools out there that you can definitely have access to. All right. Let's see. A woman put $100K cash down on a block in Montreal, picking up cans for 3 years. Holy cow. That's pretty good. That's pretty good. I know when I was a kid, when we wanted extra money, we used to go door to door, just collecting pop bottles. Well, back then, I mean, you could get, used to get like 10 cents or 5 cents every single bottle. It added up pretty darn fast. So, for example, like if Mother's Day was coming up, myself, my brother, and my sister, we'd be out there collecting pop bottles, and then we would be able to buy, a card or something for Mom. All right. Rory says, in my opinion, Enbridge should have had a dividend payout closer to Pembina, but I'm okay with it so far. Just don't increase it too much in the short term. Yeah. Now they're on the dividend aristocrat list, so they'll probably, even if it's just a token tiny increase, that's probably going to still happen. Cans add up over time. Yeah, I mean, that's the whole philosophy of nickel and diming it, right? Rory says, Pamina looks like the start of a swing trade. Beautiful dip. Ooh, let's take a gander. I have not looked at them in the last... I don't think I've looked at them in the last little while. So, here we go. Pembina, so PPL. Okay, I'll pull up their 1 year and take a look here. So, okay, yeah, let's see here. Yeah, you got a little bit of a dip happening here. Interesting. It's going to be very, very interesting to watch a lot of these energy stocks and see how they respond. Once we, if we get a trade deal on the 21st of July. So we'll have to see. Right now, I know I want to be optimistic about it, but I'll tell you, Trump's he's out there a little bit. So I don't know if we can trust it. A Nightbot. All right. Jim is in the house with an I am here. Brian says, I might start looking into those BMO CDRs. Yeah, I think they got a lot of potential for sure. I do like the CIBC ones have been fantastic. Let's see. Jim says, I liked. Nice. The one-on-one interviews will be great. Yeah, and I don't have a schedule for those. So the first one, as I said, a week from tomorrow. It's really going to be when I have an opportunity that I can get somebody in. I don't want to just have we're not going to have one with me and JJ, for example. He's the mod. I'm probably going to hold out for, big people. Maybe I can talk Canadian in a t-shirt showing up one of these days. Or I'd actually like to get Russell Matthews, see if I can get our schedules in line, because we've actually talked before about having him come over for something. So maybe even Russell Matthews would be fun. So I'm going to hold out for bigger folks. So the bigger folks. Also, if I do look at any fund managers, if I want to interview a fund manager, maybe, for example, that might be in that format. We'll see. This is the first one. We'll just go from there. Right now, my focus is on that one. So getting Brandon in here and seeing where that goes. And let's see, Brian says, yes, it will be nice to see you with Brandon. I've actually been on his channel once. So there is me and Brandon together out there. All right. Doorpot says, let's see. Yes, Rory, please share your strategy. All right. And guys, we have a Discord. So, if you guys ever want to share strategies, pretty much anything is open over on the Discord. As long as I have one rule, just be respectful to each other. That's it. As long as you do stuff like that, feel free. I mean, and if you want, I could even create I could create a room or something for that. I mean, anyway, just to let you know. The Discord, by the way, if anybody is interested in checking that out, I'll get the Nightbot. The Nightbot will drop the Discord link here in a moment. Jim says, Trump's copper tariffs. The market just didn't blink. Oh, I know. Yeah, these copper tariffs. Oh, boy. So we'll have to see. I mean, it's kind of like, imagine being in Carney's boots and you're trying to get the aluminum and the and the steel tariffs dropped, and all of a sudden it's like, oh, and yeah, by the way, let's throw the copper tariffs in there too. Boy, what can we do? All right, Bleak is in the house with a hey. And let's see, Dorpat, what is the difference in fees between the CIBC and the BMO CDRs? I don't know. I have to do some research on that. All right, and there's the Discord number. Let's see. Jay says, Canadian in a t-shirt, what got me to sign up for Questrade? $50 I find hard to resist. Yeah, exactly. It's and Canadian in a t-shirt, he's been very pro Questrade for a very long time. So it's kind of one of those things. Every time somebody comes over and says, how do you do a Norbit's Gambit on Questrade, I'm just like, all right, put this in Google. Norbit's Gambit, Canadian in a t-shirt, wonderful video, bang. I almost should almost have it highlighted for Discord, but not so much anymore. Not so much. What can I say? All right. You looking pretty today. It's not me, it's all the light. I got 3 lights hitting me, so it's making me look a little more radiant than I probably am. So we'll leave it at that. All right, guys, we are getting close to the end. So if you got your final questions, let's get them on in. I'll get them answered for you. Oh, I love it. Brian says, copper is already high. Still a lot of crazy theft going on for it. Sooner or later, someone will find it quite shocking. Stealing from hydrovolts and poles. Yeah, it's dangerous stuff. Yeah, a lot of new development places, they actually have to have security guards guarding them at night to keep the scavengers from coming in and stealing all of the copper. So yeah, that's a big issue for sure. So yeah, copper's expensive. Here's the beautiful thing though. We're looking to diversify markets. I'm sure we'll find somebody to buy our copper if we can't sell it to the States. But yeah, it's going to be fun. I don't know. All right. So yes, the next video coming out, guys, for Friday. Now, if you're a channel member, by the way, you get to see things a day early. So you'll be able to watch that tomorrow afternoon. I am doing a deep dive on HHIS. So I know you guys talk about HHIS quite a bit. So we're going to do a deep dive on HHIS. That's going to be fantastic. We will be back on Sunday. On Sunday, we're going to be looking at, the news, as we normally do on This Week. In addition to that, and this is a great point here. Jim is saying, are you going to do a video on the new Hamilton Daymax ETFs? Yes. Yes, I am. It is on my short list. Especially right now, I've been kind of holding off for now until we get more information. And then I would definitely like to do it. So these new ETFs, so these Daymax ETFs, they are going to be, they're going to have some half decent dividends, and they're going to pay more than once a month. So I don't know if it's going to be, maybe twice a month, or if maybe they're going to do a weekly dividend. We'll have to see. So I'm waiting for more information on these, but they do look very, very interesting. Basically, they have options on them, 0-day options. So that basically means it's a quick turnaround. They can basically pump cash really, really fast. And that's why they'll be able to do dividends much faster, much more than just than just once a month. So, for dividend junkies, they are going to like it. Are they on Canadian or American stocks? I think they have. An American version and a Canadian version. So I think you have both options, Brian. So both Canadian and American stocks. So yeah, the best of both worlds. I can't wait. I'm actually really looking forward. Like if I kind of wish they had already dropped. I even thought about them for today. I'm like, I don't have the information I want because, I need to have at least a little bit to go on, a little bit. Right now, there's just too much speculation. They've only given quite literally, I could read to you all the information that are out on them, and that would take 3 minutes, if that. So yeah, that is high on my list. Jim says they are going to be on sale next week, and they pay out bi-weekly. Okay, there we go. So some new information apparently has come out. All right, so yeah. Yeah, I'll get some info. I will get a video out on these fairly soon then. Because I am pretty hyped on it. So I do like that. And it's going to be bi-weekly. Interesting. I like that. All right. Your Dammits says, last week, 4 teenagers broke into an abandoned building here in Montreal to steal some copper. 2 of them ended up in intensive care from electrocution. The other 2 in jail. Oh, my God. Yeah, that's... and that's the danger. Like there have been a lot of concerns with them trying to, they've been stealing wire off of telephone poles and other things that are electrically active. It's not worth it. It's not worth it. I mean, look at this intensive care. And once they get out of intensive care, you know where they're going. Well, they're going to go join their other 2 friends in jail. Yeah, it's not good. It's not good at all. Hellgunner says, can I sell a stock in a non-registered account and buy it back in my TFSA the same day? Yes, you can. You can. The only thing is if you do that and you generate a, let's say a capital loss, then by buying it back, even though it's in your TFSA, it does negate that capital loss. But if you're just doing it to move it, because you want to move it from there to there, you're perfectly fine. You just don't get any of the capital loss benefits. Now, if it's a capital gain, unfortunately, they will hit you for the capital gain. It's unfair. It's not fair, but they will. Jim says there was a new press release at the start of the week. Okay, I did miss that. Well, we are already into the middle of the week. I will check that out. But yeah, it is high on my list. I can't wait to check these out. Let's see. They start at 24 a share and payout is forecast to be 20 cents. Okay, that's not bad. Not bad. I'm liking that. So yeah, we'll get some fundamental yields on it. I'm looking forward to it. I am looking forward to it. I wish there were a few more of them though. I really do. But yeah, all right, we'll get those done. All right, guys. So it doesn't look like we're gonna have a Friday show. That's fine. That's fine. It's the summer, so what can I say? But we will be back here on Sunday for this week. Should be a fantastic show. Until then, guys. Oh, wait a minute. Andrew, I thought you forgot. Andrew got a comment in pretty quick. Andrew gave me a heads up that this was coming. So CTZ. All right, let's pull up CTZ. Now they're a tech-related penny stock. So, and as you guys know, I'm not a fan of the penny stocks, but if you're going to get into a penny stock having good fundamentals, that is not a bad place to start. And I will pull these guys up. Let's take a look just in the last year. Look at the way that they've been moving in the right direction. So honestly, they kind of left the penny territory almost, well, not quite a year ago, but in November. And well, they did come back down. So we can't give them full credit, but they've been moving in the right direction. Now, they are, like I said, they are a tech company here. So you can notice here that they acquire and manage emerging high-tech enterprises and sound business solutions for their customers. I think that's a good field to be in. I think that's a great field to be in. Now, and let me give me a second here. We'll pull up the key data here for you. I love their return on equity. It is north of 20%. And you guys will know that's something I really, really, really adore, is being above 20%. The return on assets also up there big time. Now, they do not have debt. That, put those things together, I do love it. They did have a dividend of 5 cents. I don't know if it's a regular dividend scheduled or not. It's not giving me that information, but I like, they're profitable. They're moving in the right direction. They're in a sector that I think has the potential to grow. They're still small, so I would have a certain level of caution with them, because, not all of these companies are going to make it, even the ones moving in the right direction. So I would say, if you want a piece of this pie, get a small serving, and see what happens. But yeah, I think it has potential, Andrew. I think it does. I think it's a good, I like what I've seen so far. It's certainly worth going deeper into them. So yeah, I am liking them. All right. There we go. We got that one in. All right. You know what? I need to be big. If I'm going to leave, I need to be big. All right, guys. We'll be back here on Sunday. I can't wait. It will be a fantastic show. I hope to see you guys there. Until then, enjoy the rest of your day, and take care.